is recorded. I did forget to click the recording, so I did just go ahead and click that and start that now. But ground zero is your contracting. When you're setting that up, you really do need to be thinking with the future in mind. Now, if it's been a couple of years since you've done it, and maybe now you're looking at getting it updated, there's no better time than now to make sure that you're doing that. If you ever want to maybe bring on an additional agent in your agency, you'll want to make sure that you have that corporate contracting in place. As I said earlier, the way that you're contracted can potentially impact the way that you're taxed as well, or have impacts for some of the things down the line that we will talk about. If you are on an LLC and you're still categorized as a pass-through tax rate, you're not going to be subject to that corporate tax rate. Now, that won't benefit everyone, but there are some people that it might benefit because the corporate tax rate and your individual tax rate are two different brackets, two different percentages, and all of that differs based on where your adjusted gross income comes out at and your taxable numbers there at the end of the year. So if you think you may be on a buffer zone where you're kind of hitting an upper ceiling on what your individual tax rate is and how much you're paying on your taxes, I'd talk to your accountant. You can actually change your tax rate. There's a really easy form that you can go through. It's form 8832 with the IRS. And I say that because the top individual tax rate is 37%. It's a pretty hefty percentage to be paying on your taxes. If you can update the way that you're categorized and not be on a pass-through individual tax basis, it might be worth looking into if you're at that or pushing that bracket, just to make sure that you're not paying too much in taxes if you can easily make some adjustments and save on that. Now, we most commonly see LLCs here with our agents. S-Corps are also pretty common as well. There's a lot of advantages and disadvantages to both. So make sure if you are meeting with an accountant, if you haven't already got that set up, that you're talking through both of those options. For an example, on an S-Corp, you can actually set yourself up as an employee of the agency and just pay yourself flat salary off of payroll versus relying solely on what 1099 commissions come in, your renewals and all of that. You can just set yourself up as an employee and make a base salary every year on top of that. Now, if you do go that S-Corp route, there are a lot of additional things that you have to keep in mind. The deductions and other things like that get looked at a little differently. Sometimes you have to have accounting codes when you're actually submitting those deductions. So there's a lot more that goes into being an S-Corp than just your tax rate or how you pay yourself. So if you are looking to maybe make that adjustment or you're not sure which one's going to be the best for you, definitely give your accountant a call, an email, however you like to communicate with them, because this really is your ground zero for how everything else can play out and the amount that you're going to be taxed. Now, I know this is everyone's favorite topic, which is talking about retirement. No one likes to feel like, oh, you know, I'm ready to leave the industry, or, you know, there's always that worry of, well, what are my clients going to do if I do want to leave the industry? But at that same, on the flip side of that coin, nobody wants to work forever. You know, we all want to take some of those vacations we've been dreaming about. If you've got grandkids, maybe if they live out of state, you want to be able to spend more time with your family. Or maybe just traveling is what you've always wanted to do, live that RV life for a little bit. You're going to have to plan with retirement in mind. There's a lot of different ways that you can do this. There's a lot of different planning that you can do as well. Retirement accounts are extremely common. I've got a couple examples here up on the screen. We've got the SEP IRA. We also have the Simple IRA. Now, the SEP IRA is traditionally best for self-employed people with few or no employees. So if it's just you at the agency, or if you've got 2 to 3 employees, that SEP IRA might be a good fit for you. It does have its own contribution limits. It's either the lesser of $66,000 in 2023, or up to 25% of compensation for your net self-employment earnings. I'm going to repeat that again because I know there was a lot of numbers there I was throwing at you guys. So on an SEP IRA, which is traditionally best for self-employed people or small business owners with no or few employees, your 2023 contribution limits is $66,000 or up to 25% of compensation or net self-employment earnings, whichever of the two is lesser. That's going to be your contribution limits. Now, some of the tax advantages of this SEP IRA is you can deduct the lesser of your contributions or 25% of those net self-employment earnings on your tax return. Scott, great question. It is $66,000 for 2023 on that SEP IRA contribution limit. So great question. Keep them coming, guys. As I said, you can deduct that off of your tax return. So that then decreases your taxable income, hopefully helping you out at the end of the year to not have to pay quite as much out there on your taxes. So if you do have employees, though, this is a really important thing to keep in mind with the SEP IRA, is you must, as an employer, contribute an equal percentage of salary for each eligible employee. So if you're contributing 10% for yourself, you've got to contribute 10% for your employees as well. So that's something to keep in mind if you do have other staffers and you're looking at going the SEP IRA route. And Scott, yeah, previously there was not a Roth version of it, but under new legislation that was signed actually December of 2022, Roth contributions are allowed. So that's a very, very recent change on the SEP IRAs that they do now allow for Roth contributions. So if you are interested in getting that set up, you can do it online. Me personally, I like to do as much of that kind of stuff in person. So if you know a local financial advisor, give them a call. They'd be more than happy to get that set up for you. One of the other most common ones, and the other one I have here on the screen, is the simple IRA. This is traditionally going to be better for your larger businesses of up to 100 employees. So if you've got, yeah, Peter, great question. That's something that I'll touch on here in a little bit. Don't want to get too far ahead of our slides here, but great question, Peter. I will keep that on top of my head for when we get to that section. The simple IRAs are great for larger businesses, traditionally up to 100 employees. They have different contribution limits. They are $15,500 on those for 2023. If you contribute to other plans on top of that, your total contribution can't exceed $22,500 in 2023. Again, on this one, those contributions are deductible, but distributions on that simple IRA in retirement would be taxed. So that's something to keep in mind as well. However, contributions made to your employee accounts are deductible as a business expense. So if you are a larger business and you have a lot of business expenses that you want to deduct, that's another way that you can take advantage of that. On the employee side, this one operates a little bit differently than the SEP IRA. The contribution burden isn't fully on you as the employer. This is going to operate much similar to how a lot of workplace plans operate. You can match up to, say, 3% of employee compensation, or just do a fixed amount per every employee, and then the employee can put in what they would like to. So those are two of the most common ones that we see is the SEP IRA and the simple IRA, and they can be very dependent upon your size and how much you do want to contribute. And then lastly on that screen as well is we've got selling your agency. This is another great retirement option. If maybe when you were a young agent just starting out, you didn't really put a whole lot away for retirement. You were, fighting for every dime that you were getting out there, and you didn't stack up quite enough that you want, and maybe you don't have a successor or someone to take over your agency for you, or someone to pass it down and start running it on your behalf when you are ready to retire. Selling your agency can be a way to kind of get a small, retirement package out of that when you do decide to step down. There are a lot of things to consider when you are selling your agency, and there's a lot of factors that go into the evaluation of that, such as how many policies does each client have, how long has each client been on the books, or just a couple of examples there. If you do want to consider selling your agency or having that talk, figuring out what the potential tax implications might be, because it can depend upon how the purchase is structured, the dollar amount on the purchase as well. You could potentially be looking at capital gains taxes, and those definitely are never fun to be staring at that tax bill there if you've got gains taxes. So if that's something that maybe you want to consider 5 years down the line from now, just make sure you're kind of comfortable with where those dollar amounts are. Our very own Dan Mangus runs what we call our acquisition pathways department. He's helped a lot of agents through their own sales of their agencies, all the way from A to Z. He'd be more than happy to have that conversation with you just to see what that looks like and make sure you've got a full scope of the picture. But we have seen a lot of agents sell their agency and then take that as their retirement package and sail off into the sunset, so to say. So those are the biggest things when it comes to planning for retirement. None of us want to work forever. We all love our clients dearly, but we also have our own goals and aspirations that we want to make sure that we're taken care of. Now, we've got this next section, which is all about keeping it organized. Someone like myself, I'm a little ADD, a little OCD, so this kind of stuff, right up my alley. But this doesn't speak everyone's language. This is some stuff that sometimes people struggle with, and so that's why we want to make sure that we talked about it on today's webinar. So I've got 3 main things that we're going to go over on this. The very first one is keeping your receipts. I know you're probably in your head picturing, a stack this tall on your dining room counter of various receipts and purchases throughout the year, and how daunting that can be to go through at the end of the year and making sure that they haven't faded or gotten worn off or rubbed off or anything like that. But I have it on here because if you are ever audited by the IRS, you're going to need to have some sort of receipts on hand. You're going to want to be able to show proof of these purchases. If they've got questions, proof of your deductions, anything like that. The biggest recommendation that I can make is to invest in some sort of software where you can store all this digitally. If you want to scan it and upload it, that way you've got the PDF copy of it. You don't have to worry about saving the physical receipt or worry about it fading. I know I've stuck a receipt in my wallet before, and 2 days later, if that even, it's faded and almost unrecognizable. So I definitely recommend digital storage as much as you can. QuickBooks makes it really easy. Just for an example, that's what I use for my wife's business. We keep everything stored digitally, and then we can upload and send all of that to our accountant come the end of the year. It also makes it really easy to, when we'll talk later about paying your taxes, to track all of that as well. But keep those receipts, make sure you've got everything on hand so that hopefully you're never audited, fingers crossed, knock on wood, but if you are, that you've got proof of everything for anything that they might have questions about. Now, second, and this is one that a lot of people do when they start, but it can still sometimes be forgotten, is to have a business account. One of the things that the IRS will look at, or if you are ever sued, is if you're commingling your money. And what I mean by that is if you just have one, your primary checking account that you've had for the last 25 years at that bank, and everything just goes into that account. All your regular purchases, all your work purchases, all your income, all dumps into that account. You're then commingling your money, and that can actually leave finances at risk if you were ever to be audited. So I definitely recommend keeping that separate. So have a business checking, business savings, and then your personal accounts on the side. And if you can then pay yourself out of those business accounts. Another thing that it's not listed on here, but another thing that I always stress is get a business checking or a business credit card. You're going to be making a lot of purchases. A lot of them have great reward systems. I know we get random pieces in the mail all the time from various business cards, and I'm sure you guys do as well. But really look into that if you haven't. That can keep all of your expenses in one place. You can rack up a ton of rewards, whether it's mileage, cashback, trips, whatever floats your boat. You can really take advantage of that on a business credit card. So if you don't have one, I would absolutely recommend looking into getting one. Keep everything nice and streamlined and really rack up those rewards. Now, lastly on here is paying your taxes. And what I mean with that is to make sure that you have a system when it comes to paying your taxes. Some people like to do big lump sums at the end of the year and don't want to mess with trying to do it quarterly, or some people like doing it quarterly, paying those estimates every quarter. If you do want to do a big lump sum at the end of the year, that's completely fine, but make sure you're using that business savings account that we talked about earlier and putting money in it every single month after you get all of your commissions for the month from all of your carriers to ensure that you've got enough in there to pay that at the end of the year. You don't want to, after those taxes are filed, see that bill from the IRS and like, I don't have enough liquid money to pay them. While there are payment plan options and you can work on those, it's extremely stressful to have that burden and to see that final number at the end of the year and not know what you're going to do about it. So in order to alleviate that stress, if you want to do the lump sum at the end of the year, make sure you're stocking as much money as you can away in a savings account. Whether you just want to kind of default 20%, I've talked to some agents that have done that. You can just default 20% every month, transfer it, and then you put away 20% of what you made on income for that month into that account for when the tax time comes at the end of the year. I know quarterly taxes can definitely seem very, very overwhelming. They were when we first started doing them on my wife's business. Again, we use QuickBooks. It will actually estimate based off of your synced checking accounts what your income was and then what your quarterly taxes were at the end of it. Everyone's biggest worry, though, when they're doing quarterly taxes and making those estimated payments is, well, what happens if I underpay? Well, there are underpayment penalties, but you have to be severely underpaying traditionally for those to occur. You can use the form 1040-ES to figure your estimated tax, or like I said, an online service like QuickBooks will do the numbers and do the math for you based on your classification and all the information that you input in when you set up. So I would definitely recommend looking into one of those if maybe you don't want to mess with that large bill at the end of the year, or if you just like kind of having it done quarterly and it helps keep you organized and keep you on track. Now, I know I talked earlier about those underpayment penalties, but the IRS will not charge you an underpayment penalty if you're paying at least 90% of the current tax you owe for the year, or 100% of the tax you owed for the prior year, or if you owe less than $1,000 in tax after you're subtracting withholdings and credits. So that's how their underpayment guidelines work. And now I'll repeat that again because I know a lot of numbers and a lot of percentages there, but the IRS will not charge that underpayment penalty if you're paying at least 90% of the tax you owe for the current year, or 100% of the tax you owed for the prior year, or if what you owed was $1,000 less in tax after subtracting withholdings and various credits. Now that safe harbor rule is a little bit different when you get into higher adjusted gross incomes. If you think you might potentially fall into that boat, please speak with a financial advisor and they can advise you best on how you could be impacted by those safe harbor rules and safe harbor guidelines. I am not a certified financial advisor, so I can't advise on that, but those are the rules in writing on the safe harbor guidelines. So if you think you're in those AGI brackets, please do speak to an accountant to make sure that you're getting the best advice possible on getting those quarterly taxes paid appropriately or end of the year taxes paid in full. Now, this is everybody's absolute favorite part of being a business owner, aside from just doing what they do and loving what they do. But everyone likes to deduct and everyone likes to take things off of their taxable income so that they have a smaller tax bill at the end of the year. And absolutely take advantage of every single deduction that you can. Like I said, the purpose of it is to decrease your taxable income at the end of the year. Therefore, hopefully decreasing the amount you may owe to the federal government as well. Now, put some of the really common ones on there. We've got, your marketing expenses are tax deductible, computers, mileage, and speaking of mileage as well, that standard mileage rate actually went up as well. It's now 65.5 cents a mile. That's up 3 full cents from the second half of 2022. Pretty significant increase. When you're looking at your mileage, it can be traveling from your main office to a client's house. So that's one way you can track your mileage. There's a lot of apps that can do it for you. If you don't want to, manually write down your odometer numbers when you drive from your house to Sally's house and vice versa, there's a lot of apps that can do that for you. But that mileage rate did go up to 65.5 cents per mile is what you can deduct and get that off of your taxable income. And then your business insurance as well. There's a lot of different types, including personal insurance and then your actual insurance on your business itself. There's a lot of different insurances that we do advise that every agent make sure that they have, including cybercrime protection. As we've seen, there's an ongoing increase not too long ago. LastPass was actually hacked, which is a password data storage system. But make sure that you've got that cybercrime insurance. It can be an absolute lifesaver when all said and done, if anything were to ever happen. Now, when you're looking at deductions, there's always been, well, if you go out to dinner and you talk business, you can deduct it and yada, yada. And while that can be true, the phrase that you have to keep in mind when you're looking at what you can deduct is it necessary and ordinary? So is it necessary to doing business or is it ordinary to my field? So if you, sitting down there and you're looking at buying a new laptop that's going to be for business use, that's necessary and ordinary. If you're looking at new marketing expenses, necessary and ordinary. So make sure you're not stretching those limits too much. Stretching the limits can lead to additional questions and additional backlogs in that processing. If you are looking at making a large purchase, if you're maybe looking at buying new stuff for the office and spending a lot of money, the depreciation, so from about mid-2017 to the end of 2022, if you bought costly equipment, you could claim 100% of that asset's bonus depreciation, which can spread out over the life of that equipment in the same year that you bought it. However, unless it gets extended by Congress, and I have not seen anything yet saying that it has been, that deduction will drop. They'll go to 80% and then drop 20% an additional year after that. So if you made large purchases in 2022, that deduction will still stand, but however, going into 2023, that bonus depreciation will be going 80% and then downward. Your accountant will help you figure all your depreciations out if you've got computers and various other costly equipment that we know computers can be really expensive as well. Anything that you can go on a depreciation schedule for, those numbers are changing this year. So be mindful of that when you're looking at your depreciations for this year. Great question. So Judy asks, do I need business insurance if I work from home? Now, when you're working from home, there's a lot of additional things that you can take advantage of. So to say, there's a certain math of your square footage that can be deducted off of that as well as a quote home office, so to call it. So make sure you're talking with your accountant. That space needs to be fairly well solely dedicated to just work, but there is a square foot allotment that can come off. You may not need business insurance though in the traditional sense, such as if you had a brick and mortar store, but you do still need, your traditional E&O insurance. I would still recommend that cyber insurance that I talked about earlier. Ransomware and cyber attacks can happen anywhere at any time. So if you're working from home, I would still recommend that cyber insurance. Your health insurance is still going to be what I would consider a business, a personal insurance, but still part of your business expenses if you're not insured on a spouse or a significant other's healthcare, but not business insurance in the traditional if you have a brick and mortar store. But there are other things to consider, such as that square foot deduction. Great question, Jacqueline. I'm not 100% sure on how auto leases work. I'll write that down in the notes and I'll have someone from the team confirm auto lease numbers and follow up with you on that one. Not 100% certain on how auto leases and what's deductible off of those are going to be, but I've got that saved. I'll go ahead and write that down, and then we'll have someone from the team follow up with you. Just making notes on that there. But like I said, everyone's favorite topic is deductions. How much can I take off and save from my taxes at the end of the year? So if you have any questions, please keep them coming. I'm loving them. And Peter, I promise I did not forget about your question. We're getting to that slide here now. So now the last question is, should you hire it out or should you try to do it yourself? That really is the age-old question. I, for one, like to think a good accountant is worth their weight in gold. I'm not just saying that because my parents were both CPAs. I really, truly do believe that. As you know, like I said, we own a small business ourselves. I 100% believe that I would be losing my mind if I had to try to deal with some of this stuff by myself without a good accountant to call. There's a lot. You're going to get a lot of random letters from the IRS, from the State Department. You know, you just get a ton of communication, and sometimes you just need to ask someone what it means. So having a good accountant on hand really can be worth their weight in gold. Now, to Peter's question earlier is, how do I find a CPA who works with insurance agencies? Maybe I want to set up an S Corp or an LLC, and I just need to talk through that. You've got a couple different avenues that you can go. I recommend everyone give a potential accountant or accounting firm they're looking at working with an interview in the traditional sense. Like actually in an interview, come with questions for them. Some of the questions are, you're going to want to know what their fees look like. If I need payroll, how much is it going to cost me to have you do my payroll? How much is it going to cost me to have you do my bookkeeping? Just like I'm sure you guys have had clients ask you in the past, ask them for testimonials. Do you have someone that I can maybe call and ask if they've been satisfied with services? Just to make sure that you're getting the full scope of everything. Just because someone has maybe been in that area for 3 decades doesn't necessarily mean they're going to be the best fit for you. Maybe they like to do things a little bit differently than you do, or they're not as communicative in the ways that you want them to be. So in all honesty, give them an interview. And when you're talking to them, make sure they're able to handle your industry's needs. I know that sounds kind of silly, like, well, yeah, obviously, but like we were talking about earlier, insurance agents, have a lot of different tax things that they need to consider than someone that's a W-2. You know, you guys are getting commission-based income that comes with its own tax filing headaches and questions. You know, that comes with its own headaches and questions that they're going to have. So if they've worked with people that are commission-driven and commission-based on their income, they're likely going to be more comfortable, whether that's some realtors or, you know, I know tattoo artists are heavily tip-based. So someone that has something that's a little bit non-standard and non-traditional is going to be a great option. So if they've worked with a lot of people like that in the past and they're really comfortable with that, you know, someone may be really comfortable with, you know, your standard brick and mortar selling items stores with sales taxes and things like that. They may do that all day, every day, but maybe they haven't worked with a 1099 person in a long time. Maybe they're not super comfortable with that. So it really is just about an interview process. If you know anyone else in your area, Peter, that is an agent, even if they're not a Medicare agent, but maybe they're a PNC agent, or they do various investing, you know, they're big on annuities, they write a lot of that, they might be able to advise you on who they use. So if you've got a PNC agent you've had for a long time do your own PNC insurance, they might be able to point you in the direction of who's handled their stuff. If they're also an independent and maybe don't have someone on the national scale that does it. There are also people I've seen on some of the various Facebook forums that have recommended people that work in numerous states and can work virtually. So if that's something that you're comfortable with, you can also seek recommendations on various online forums and online groups. So don't hesitate as well to reach out. You know, always talk with your peers. When it comes to taxes, we're all friends here. We all want to make sure that we're all getting everything taken care of. So ask them those kinds of questions. If they're familiar with their industry, if you need to have payroll done, if you want to bring people in and pay them as well, make sure they're comfortable and can handle that bookkeeping as well. Got a couple questions and comments here. Brooke, yep, I will let you know as well on the auto lease question. Jackie, yep, mileage IQ. She uses that for her tax mileage. That's a really common one. I've seen that one used pretty regularly. I think it's one of the top ones as well in the Apple App Store if you're looking for it. But Jacqueline said that she has had excellent record keeping from that. And then Mary gave great feedback to the business insurance. She's also a P&C agent for those of you that haven't had the pleasure to talk with and work with Mary. But you may be able to extend liability from your home, but not always, going back to Judy's working from home question. If a delivery person were to trip and fall when delivering business items to you, it may not be covered under homeowners insurance, and you could potentially be sued. But on the flip side as well, you're also not traditionally having clients come to you in your home. You're probably either going to them or meeting them at a neutral site. So there is a little bit of third-party exposure, but review it with your home insurance agent, your P&C agent. Maybe they can add an endorsement on top of your already existing policy. So Mary, really appreciate you adding that tidbit. Like I said, had the pleasure of working with you for a while, so really happy you were able to weigh in on that one. But that is going to pretty much wrap us up. I know we have it on the schedule for a full hour, but I know it's OEP. I know you guys are busy. You've got a lot of clients to get taken care of. I just want to send a big thank you to everyone that did attend and did hang out with us today. I know taxes aren't fun, but we covered a lot of information, everything from making sure you've got your contracting in order so that it's benefiting you the most and that you're set up for the future as well. If you want to retire, bring on an agent. We talked about making sure that you're set up for retirement. If you're looking at opening one of those SEP IRAs or a simple IRA, make sure that you're talking to your financial advisor if you already have one, or if you don't, I would recommend finding a local one that you can work with. If you haven't already, they can also be really good referral sources. So it really can be a win-win relationship there for you. You can have your retirement getting taken care of with an IRA, and you could potentially get some Medicare referrals from them. So those can really be beneficial relationships both ways. So make sure you're talking to financial advisors and getting your retirement in place. If you want to have that discussion about what the potential impacts of selling your agency could be, please give our office a call. We'll get you in touch with our very own Dan Mangus. As I said, he's helped facilitate a lot of that through acquisitions pathways. So he can help answer a lot of those questions and talk to you about how those deals get structured and all of that. We covered deductions, everyone's favorite. Remember, necessary and ordinary when you're looking at your deductions, guys. But I'll hang out here for a little bit. I'll shut my webcam off. I don't have any currently outstanding questions, but if any popped into your head, please feel free to pop them in the question box. I will answer all the ones that I can. And if they're ones that I am not qualified to potentially answer, I will make sure to direct you to the right people to get that taken care of. Thank you again, everyone.